Hey traders, welcome to another episode of the Countdown Trader. Happy Thursday, everybody. Hope everyone's doing great. I've got the questions up. Let's jump right into it. So we have, by the way, before we jump into it, I do want to remind everybody we do have Jerome Powell at noon today, noon Eastern. We've had two FOMC hot zones in a row. What do we want to remember about FOMC hot zones? Anytime the Federal Reserve is going to talk about the economy, they're going to talk about headwinds, and then they're going to say their policy is right on track, and they're going to basically usually talk the market up. But remember, the market knows this. So they discount this in advance, meaning don't be bearish in front of FOMC hot zones. Case in point, let's jump on over to the NAS here this morning, really any of the indices, but you can definitely see on the NAS. We made a quick pit stop on the NAS at this volume ledge right in here. We kind of paused in this little volume ledge. You can see it, and then we're moving higher. I think a lot of traders, unfortunately, look at pauses as reversals. Remember, pauses are typically continuation setups. They're continuation precursors. So while some pauses will result in a reversal, most are going to be continuation. We're seeing that pretty clearly here today. All right, so next up is a quick look at the S&P, which is going to track with the NAS. Again, you see the mood that we're in front of Jerome Powell. Again, noon Eastern. What happens after noon? If there's going to be a market breakdown, it's going to be after Jerome Powell speaks, or even as he's speaking. So that lead up, both yesterday into the meeting minutes, even though the market sold off between the meeting minutes yesterday, once that 2 p.m. minutes was released, you saw the market head higher. So, be careful here. Don't fade. I think a lot of people are realizing fading Powell, as I like to call him, is not necessarily a slam dunk. But generally speaking, looking for long from lower does work in front of these FOMC events. All right. So good morning, everybody. Great to see everyone. And first question. Hey there, Alex. Good morning. Thoughts on Boeing? Sure. Thoughts on Boeing? DG relative outperformer in the Dow. Sure. So Dollar General and Boeing. You got it. Do I like Boeing? Well, again, you talk about relative outperformers in the Dow and overall strength in the Dow. So Boeing is not only a Dow name, but you're also going to see it tied to other, say your ITA, things like that. Do I like Boeing? I really don't, because I think there are other better sectors and individual stocks. Now, if Boeing continues to pull back, I don't have a problem with getting long Boeing. It's not there yet. So thoughts on Boeing? Look, it's double green. What's not to like about that? So let's focus on the double green. Let's wait for a pullback. And then, yes, I would not have any problem buying Boeing. I just don't know that it would be at the top of my list. Dollar General definitely would not be at the top of my list. DG is a relative outperformer, or unless I'm looking at a different symbol, or unless that was an acronym for something else. But no, I'd leave Dollar General alone for now. And this is more of a consumer. Actually, this is what? Retail and consumer discretionary. I'd probably leave Dollar General. So Boeing, yes. Dollar General, just put on the back burner for now. Again, I think we always want to be clear. Do we want to buy it? Are we still open to buys or shorts? And ultimately, we really should have that directional bias. As I say often now in decision-making sort of memes, if it's not a hell yes, it's a no, right? So if I'm not absolutely bullish or bearish, either way, it's just a no. If I'm open to either direction, move on to another symbol is my approach. All right. Hey there, George. So the question here is, good morning. What's my take on JCOM and Riot? Okay, JCOM and Riot. Getting a good glare coming into the office here this morning. Hit me right in the eye. Anyway, J2 Global, double green. I like it, George. Let's wait for a pullback. But remember, we are coming into earnings season. Yesterday, I think we touched on earnings a little bit, where I talk about the 642 window into earnings. Find stocks that are trending 6 weeks out. 6 to 4 weeks is that sweet spot for identifying already trending markets. That's what double green means. It's the structure of the 8, 13, 21, and 34 EMAs. All right, inside of 4 weeks, between 4 and 2 weeks, what are we looking to do? Buy the pullbacks. Inside 2 weeks, I'm going to be a little bit more conscious of the fact that we're running out of time to get our setup, our fill, our follow through, right? So we start running out of time. And remember, we don't call my newsletter the Countdown Trader for nothing. We're always counting down to something. In this case, it's the hot zone of the earnings release. So here you have earnings on May 7. Your 4-week window started yesterday. Your 6-week window was already a double green. So this is a really good candidate for not just a continuation of the trend, but also that potential earnings scenario. Now, when it comes to Riot, and I'll throw Mara in there too, I don't even look at these two symbols. I don't mean that I don't trade them. I don't even look at them directly, because the only thing that matters in this narrative is that. So when Bitcoin pulls back, I'll look for opportunities in MARA and in ROIT. But until Bitcoin pulls back, I'm usually not really that interested. So I'll use, in many ways, MARA and ROIT as a proxy, and sometimes a better one, to Bitcoin. So I like the symbol, but keep an eye on BTC USD. All right, next up. And yes, as always, to learn more about Simpler Trading, head on over to simplertrading.com. I know a lot of you are already members. And if you're not, come try out one of our rooms, grab a trial, and see what we're doing over there, because we've got a great community of supportive folks who are looking at the markets in a similar way. And it becomes not only support, but it's, as I like to call my mastery, it's a think tank. And that is powerful in this day and age. All right, AMAT. I like AMAT a lot. Infinite, because I like SMH. All right, let's move this notebook out of the way. Because I like SMH. SMH and XLC, by the way, were relative outperformers in tech before everything rolled over and people decided they were just going to, Donkey Kong the tech sector. CLOU, SKYY, SMH, XLC, XLY, XLK. You saw that avalanche. Now, as we're reemerging, and some of you might remember, I didn't mean to do it there. Here we go. There we go. As we had that 1, 2, 3 continuation pattern occur in QQQ, what's happened? XLF has taken a stall, and rightfully so, in front of earnings. Earnings officially kicks off next Wednesday, really, with the financials. XLE is taking a breather. XLF is taking a breather. So a lot of these hot sectors are taking a breather as we're seeing favoritism. And favoritism is what? It's flow and it's money, right? Attention, flow, money, all move in that same direction. And we're seeing the tick up in tech. Well, I go right back to SMH, and within SMH, we have 2 or 3 relative outperformers, and definitely AMAT is one of them. Intel is another one. Intel's another one. So if you're interested in a stall to a continuation, something aggro in this area, not bad. But for those of you that follow me here in Charts and Coffee or in one of the simpler rooms, you know that I like much more pronounced corrections, generally speaking. However, there's no reason that you could not then perhaps look at a 1-hour time frame and look for a particular setup there. So if the daily hasn't pulled back enough, maybe look at that 1 hour and say, wait a minute, we're kind of pulling back within the context of a trend, a little bit of chop. You might get a nice momentum break out of this little area here. That could be something to keep an eye on. Just shorten the time frame. All right. So don't short prior to Powell. You got it, Gary. Don't do it unless you hate your money. Guys, speak to gap psychology on the NAS today. Sure, Furman. So gap psychology. Gap psychology is, for me, dual confirmation. What does that mean? So what is gap psychology, first of all? There is a tendency for the market to, and remember, gap psychology is a very short period of time, typically within the 30-minute window of the clearing range. What that means is when the market gaps up, there is, in the first 1 to 5 minutes, a tendency to see a fade. In this case, since it's a gap up, we'll see a fade short by momentum traders that are just fading the gap higher. When is that psychology usually much more intense? When we have an open above, not just the close. See, that's sort of the traditional gap definition, which is fine. But gap psychology is even more intense when we get the open above the close and above the previous session's high. Dual confirmation gap. I think in some circles, mostly market and volume profile, they'll call it a true gap. Call it whatever you'd like, but that is that dual confirmation above the close and the previous session high. And so, yes, I would expect in the first 15 minutes or so that we might get a little bit of weakness. I hope we do. I absolutely hope we do, because what I'm going to be looking for on that move lower is to take advantage of that and get long. And I'll be with you all in both the options room and in the futures room this morning. We'll be dual broadcasting the first hour, and we'll see how that gap actually sets up. All right. Okay. So next up, hey there, Mike. Good morning to you too as well. Marty, I'm in Diz. Oh, okay. So let's talk about Disney. Sure. Do I like Disney? It's a reopening play. It's heavily weighted within XLC, which has been a relative outperforming sector within tech. So here's the thing with Diz right now. I wouldn't short it. It's not. So let's talk about other communication stocks. Let's go down the list. We'll talk about the first two. Facebook and Google are your most heavy weighted stocks in the XLC, and then you get down to Diz. And this is just double green. Facebook's taken off like a shot. We know what's happened with Google, right? But here's what's interesting with Facebook and Google. They were heading higher. No red grab candles here. Green to yellow means what? This consolidation is a precursor to continuation. Pretty simple, right? So now let's take that same approach to, say, Diz. Slightly different pattern, slightly different psychology. It's not benefiting from the rally in XLC. It's not benefiting from the rally in QQQ. So I'd be a little careful here. I actually don't love the structure here. Is there an opportunity to get long? Yes, from lower. I would say that if your tolerance to deal with the back and forth extends down to about 185.60, terrific. There's a point of control, nice volume ledge to hang on to there. Or if you're looking to begin a position in Disney, that's the spot. That would be one spot of two that I would look at. The second would be these two lows down in here, closer to 182. So this is not the same kind of, again, two stocks within the same sector, not the same kind of setup in that regard. So, and it is not benefiting. QQQ is up, and this is actually down pre-market. Be careful on stocks that are very, very dependent on the reopening psychology. And Disney, as much as it's tethered indirectly to tech, is also going to be more of a reopening name. So just be careful on that one. But generally speaking, I don't mind the long position. I would just like to get long from lower. And then I would build perhaps a nice call vertical on that one. Ravi is asking about BIG. Sure, now BIG is a good looking stock. Again, buy on pullbacks. Is this a pullback? Yes. Where are we in terms of earnings? We're in that window, right? Our earnings window is actually going to start. The 4-week window is going to start April 27. But are we in the window 6 weeks out? We're very close. We're very close. Notice that Big Lots is a nice double green. It's a long and long only. Absolutely. Now, look at the previous pullbacks. Where are my drawing tools here? Look at the previous pullbacks. You know what? Just grab my little aeroplane here. I love this thing. Pullback, pullback, pullback. Look at this thing. Hit the bottom line of the wave before it took off. Pullback, pullback, pullback. Bottom line of the wave. What's the bottom line of the wave? 34-period exponential moving average on the low. All right. And then would I then expect to get somewhere down near the lows once again? So look at the characteristics of the previous pullbacks. Double green means long and long only, but gosh, I don't want to be long at the higher highs. So I like this name a lot. It's one that I have not looked at, but I will definitely put it on the list probably today. I like it a lot. So think about the 34-period exponential moving average on the low, and then I can actually re-anchor this lower VWAP here to the 5th. Let's do that here real quick. For those of you that have never seen me do this, that's actually a really good look. So we do seem to have not hard and fast support at that VWAP, but definitely we see a little bit of respect around that zone. So, and then I'll tag this one to the 22nd of March. There we go. So yeah, kind of interesting. That's kind of where we're consolidating. But since it's a double green, I know it's just gone yellow, but that's still fine. Respect the trend that was, keeps us long. Now is excellent timing. And gang, think of it this way. And again, I haven't looked at big lots. Thank you for the, Robbie, thanks for the symbol. I'm actually going to write that one down. We all probably have, give or take, a few symbols, very similar watch lists. What differentiates us then, if we're all looking at more or less the same thing? What differentiates us is the timing of our entries. Strategies to a certain degree. I think most traders would be looking long and big. So I can't say strategy is going to be that different. Whether you're looking long calls, maybe you're going to go with a put credit spread, which would actually be pretty interesting today. Whether you want to leg into that call vertical, which would also be interesting today. The timing is what would differentiate, I think, traders' actions, say up at this level, say 69.20 versus down here on 65. The pullback is very necessary and actually pretty much in line with the characteristics. So thanks for that symbol, Robbie. I'm going to take a look at that one today. Sometimes you guys give me great symbols to look at. The stock market is such a vast thing. One of the reasons I love futures and Forex is, for the most part, my life has been looking at about a dozen futures contracts and about a dozen Forex. So my life is usually less than 3 dozen symbols, easily, usually less than 2 dozen. But once we get into stocks and ETFs, now we're talking hundreds of symbols. So that's where it's really great to have a community looking at things together, pointing out ideas. When I look at the conversations that are happening in my Sector Secrets Mastery, a lot of times the setups that we're going to talk about will be, watch lists that I give them on a Sunday or Monday. But we got into a couple of trades yesterday, started setting them up. Peloton was one of them. Lyft was one of them, because the group said, hey, Rob, these meet the criteria. Fantastic. 500 plus eyes are better than just one. So pairs of eyes, right? Okay, very cool. So CVX. Do I like CVX? Would it be considered a potential 1, 2, 3 continuation? It could be. It could be. I would still actually consider CVX just a good old-fashioned pullback, Okan. So rather than having to wait for the breakout through, say, 107.5, I'd be fine buying pullbacks. Remember, you've got earnings right around the corner, so you are inside that window to the earnings hot zone. But what I would also say right now is the flow that we're seeing going into tech is actually not as, again, when that money goes somewhere else, where is it not going? It's not going into financials. It's not going into energies right now. But I am actually quite bullish on crude and gas, unleaded gas, and I'm really darn bullish the CVX XOM narrative, which is why, by the way, keep an eye on XOM too. I think it's getting ready to have a continuation breakout. But what I'm doing in lieu of that is going with the XLE. Because remember, when you go XLE, thinking index sector stock, XLE lets you take advantage of all the heavily weighted stocks within it, Exxon and Chevron. So yes, we're on the same page, but I would not go 1, 2, 3 on that one. I would still focus on the pullback buy. Okay. Next question is, would I take long positions anywhere at this moment? Prabeesh, yes. And yeah, we are. Yeah, there's a number of places that I like the long positions, and we've been building that consistently. Sure. In terms of where, pullbacks, absolutely. Pullbacks of trending markets, just like we talk about here in Charts and Coffee. Thoughts on Philip Morris? I actually like Philip Morris. I like Altria as well, but Philip Morris is the one that's pulling back. I've had my eye on this one. This one's interesting because this one traverses 2 parts of my market life. It traverses the trader in me, but it also, I'm focused on this as the investor in me. This is not enough of a pullback to be something that would add to my portfolio, but I do like Philip Morris. And then, think about where that lands us in terms of the sectors that would give us exposure to Philip Morris. You might want to look at that broader sector. All right, gang, I am out of time and I've got to go head on over to the options and the futures room. I'm going to be dual broadcasting this morning. Thank you as always. Remember, we're coming into the Pitbull low window. So thank you for mentioning that. Absolutely. We are coming into that Pitbull low window, Sean. Let's see what happens post noon with Jerome Kapowell. All right, gang, be good to each other. I'll see you tomorrow.